welcome to my YouTube channel. Again, I am going to be going over a recap of NFP Friday on how you guys don't have to be afraid of news and you can still follow momentum, and how momentum-based trading looks even based around an NFP week. So I'm just going to go straight into looking at Euro Jappy. Okay, guys, I've got a couple pairs up. We can go through 20 pairs, but I got two in particular because I trade these pairs, and we have Euro Jappy, and I also have USD Jappy. Okay, whoa, too big. Okay, so what I have here is the 4-hour time frame. Okay, I have the 4-hour time frame, and what I care about when I'm trading 4-hour pushes, these high volatility times, what I care about is, of course, by looking left, identifying where price next zone is. So in this situation, you can see on Euro Jappy, when you get to these pivotal points in the market, you have to increase your candle, because just based off the 4-hour, I cannot properly really identify where structure is going next. I mean, you can definitely see, okay, well, here's a good idea just based off of these, but it's not accurate because it's not as close. So you definitely want to go to the daily, click on the daily on times like this just to see, okay, this is where, the reason why I'm not going is because I'm on replay, and I want you guys to see what I'm seeing. But you have to go to the daily. So even disregard this. After I let it run, we will go to the daily. And maybe I should have started with the daily. No, I never started with the daily. Always 4-hour. Anyways, so what I care about, of course, looking left, you want to see the zone. You want to see where price just rejected, and then where price can also go. This is being in between zones. So in a time like this, identifying the market structure, of course, you want to see what these higher time frames have done and what they are doing. So we have been making lower lows and lower highs on the 4-hour time frame. And what's key during this time is what these recent 4-hour candles did before. So when you're looking just at the wicks that the previous candles did, you would see, of course, we made basically the first, because this was not, there was no bullish pullback, so price just reacted during the week to news and was a huge drop. These were the first real pullbacks of this market structure. After breaking this structure, now being in this zone, but finally creating lower lows and lower highs. So it's very important to know that this is the first pullbacks. We just made a lower high. And so, of course, what do you do? Sell the lower highs. But what we would have been looking for is, of course, on the 15-minute to see how the structure handled. But we make another lower low. We break. We retest where price broke structure. Rejection, rejection. Huge rejection. Wick to fill. We're asleep. Huge liquidity. We're ready to go. We're ready to go. This liquidity is your signal that we are ready to go, because we still are in between zones. So when we look, we've already touched this zone, but we're in between. News plus currency meter, because the currency meter now is not going to be intact. But at that time, wait, maybe I screenshot it. I can go back and look. But at this time, the Japanese yen was significantly stronger, and the euro was at no strength. So of course, being red for euro, all green for Jappy, we're going to be going bearish following the Japanese yen. So those are just extra confirms. What I want to go to now is, now that we've decided, okay, we're going down. We're going down. I'm going to go to the 15-minute time frame. It's going to erase everything. You're going to see what price already did. and then we can go in and identify the structure on that lower time frame. So we're higher time frame confirm. We're at least 9 pips to the next zone. We're in the zone, but we still have a little wick to fill. Everything is telling us that we just made lower lows and lower highs. Basically 2-2 confirm change. That's a change of structure. We're going. Liquidity wick, rock and roll, let's go. So the lower time frame should have really nice or just lower lows and lower highs anyways. They don't have to be really nice. So now we go to Euro Jappy on the 15-minute. I go to right before our 6 o'clock, and let's see what price did. If you're really into the technical stuff, I'm not. I probably would have overlooked that. But this is what's significant. You now make a 2-1 confirm on the 15-minute. So a 2-1 confirm, when you have identified proper zones that are potential reversal points, in this case, you can say, okay, well, the 15-minute, we have a triple top, all in this resistance, but what we know is that this is a, on the 4-hour, was this new lower high to break, to go bearish again, right? And what do we have? If we're looking at those technicals, triple top, whatever, what I care about is the fact that now we have such a break of structure. Like, look, you can see that we reject for a half an hour here, going straight into a drop. This is at 4:45. I'm asleep at this time. Now I have a new lower low. We've came back down here and a lower high. This is classic 2-1 confirm off this resistance. Being higher time frame confirm, we are going down. The currency meter, I bet you if I pop up currency meter, it's still gonna be okay. Look at that. The Japanese yen, it just has full strength, and the euro has nothing. So this was pretty. Throughout the whole day, it was like that. U.S. dollar and Japanese yen were fighting. But all day the euro was not very strong, like at all. And the Japanese yen consistently remained strong. So that's a bearish trend. So just looking at this, currency meter is telling us we're going down, right? Let's pop up our plan, right? You have higher time frame momentum. Do I have higher time frame momentum? Yes. Remember, the 4-hour time frame is telling us we're going down. This, of course, is personal, so whatever kind of person you are, there are certain things that I have to do that I always want to do, and it's like just something simple as taking a shower that just wakes me up, alerts me. It's one of my little things that I do that I want to do every time before I trade. So whatever kind of person you are, figure that out, and what are some things that you need to do before you trade. So currency favors in, I always get this like a tongue twister or I'm dyslexic. The currency meter is in favor of trend. This is just our bonus. However, in a more advanced way of identifying momentum, you can look at currency meter first. This is also personal, but you can identify structure, higher highs, higher lows, lower highs. We could identify our structure. We have a lower low and a lower high. We have a 2-1 confirm right at 6 a.m. We've broken structure again. This is important. We've completely broken our structure. Okay? Completely broken our structure. If we're going to pull up to go make lower highs to keep going down, this would be your key point of entry if you were waiting for any more pullbacks. Your stop loss would be in this range. So even with it being in this range, this would be the furthest potential place. But I wouldn't see this place. Not being this confirm. That's why I'm taking shorts. We're waking up. By 5:30, it already closed on support below. In the 5-minute, when we hop down to the 5-minute, you'll see the 5-minute, even in the 15-minute being confirmed that we're going down, we have the same thing, like even lower low, lower highs. We broke structure, we came back to where price broke structure, liquidity, boom, 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 we're going down. We broke structure again, made a new lower high with wicks to go fill. Like, we want to go down. You can see the structure on this time frame. So our currency meter is telling us we're going down. That's our bonus. Of course, our zone. So the dailies where we want to know where that biggest zone is, of course, because we're creating these new lows and we don't have the structure on the 4-hour to see it clearly. And you can clearly see which direction momentum is going. It's pretty obvious at this point. If you're going through, if you're going through your structure, it's pretty obvious at what's going on. So now we play. Now you can see. Let's just look on the 5-minute. So we're taking sells. Boom. Right? Our next zone was 10 pips. Like here, look at where we're at already. Okay, pause. I'll pause. Even on the other lower high, this is right before, this is literally right before the candle is about to open. The lower time frame is making more lower lows and lower highs. We're going down. Your stop loss range, whatever, let's say it was 11 pips. Now, mind you, this is at 6:05. This is 5 minutes into a momentum push. 5 minutes, 25 pips. You're done for the day. You're done for the week. Whatever you want. When identifying and trading momentum, following market structure, your trading plans can be whatever you guys want. See, what this just kept going from zone to zone. So what once was a 13 pip stop loss was a 1 pip at max retracement. That's a 1 to 25 in 5 minutes. Trading momentum. And so when you look at it from a 4-hour perspective, I'm going to keep it ugly like this too because actually I can't. So you see on this daily, this is where your wick range was. Based off of this. This is based off of, even look at where the daily closed. Let's just block everything out. So you can just see the daily closed below structure. I mean, look at this. Boom, boom, boom. We're loading up. So this is below this structure. It's actually, that day didn't open yet. It closed here. This was it. So we're still in the day. Of course, even looking at the 4-hour. But we closed on the structure going down to these wick ranges. So the next ones, of course, are down here. And then when we bring everything back, it's all just clumsy now from all the... I just gotta delete all these. It just looks too... Oops. I don't want to delete everything, even though... These guys are... Okay. So this is the 15. So these lower lows and lower highs were on that 5 minute. But let's just look from the 15-minute perspective to see what happened. So your sell is here. Either in that pre-push there, off another lower low and lower high, or your sell is here, what, a 4 pip difference. But look what the opening candle does. 17 pips in 115 minutes. Right? Let's experience this now. So we know we got a 2-1 confirm off of this, let's say, triple top. Really, really nice demand zone. 2-1 confirm. 2-1 confirms are big on the 15-minute time frame. On the 5-minute, they're riskier. But when you have them on the 15-minute, you've got this, in our case, continuation of momentum, but this change of structure here, just finally rejection. My computer died. Had to do 2 videos, so those who know me are gonna have a little bit of a laugh. Here we go. We have 2-1 confirm, 15-minute time frame. Currency meter is telling us we're going. So what do? You take the trade. A 30 pip 2-1 confirm off of this being 4-hour time frame confirm. 43. Does it ever stop? Finally 2-hour zone and still not done. So in a total of 45 minutes, we're at 64 pips. Let's just pause it for a second. 64 pips. Making a new lower high or changing structure, but this is your trade. This is you following higher time frame momentum, following the market structure. And I'm literally giving you a template of how I read the market. This, you are done. With whatever stop loss in profit you have, and you write it out, you are done. Done for the day. So I'm going to leave this here. And now I'm going to go to USD Jappy. Because I want to show you guys some more. So what does USD Jappy have done? Looking left, seeing this whole structure. This is, when I'm looking at a screen, just my little tips, the little things that I do. As soon as I'm moving it out, those first wicks and things that I see that make sense, that's my next zone. So it gives me a template. So then I can just say, okay, well, how far to our next zone? Just if you match it up here, okay, so maybe around 16 pips. Filling the wick and then going down to the bottom of the zone. So we are, this is just textbook. So when we're looking at this chart, you automatically see what did we just do. So of course we made another lower high, but we've rejected this. I hate how it does this. Do not. Come over it. At least 16 pips to our next zone. This is your heavy margin trades. That this is, it does not matter what is going on. You cannot stop the momentum from happening. Same thing with the EJ. You can't stop momentum from happening. Trading around the higher time frames. And this is textbook. And this happens every week. In between zones, super engulfing, broke all of these structures. Even this is your key point. This here, based off of this higher low, price broke structure earlier this week. Now we're breaking it again. This was the beginning of the week, and this is the end. Going right back to it. But we are in between zones. We have broken all of these structures. Now we're in between zones. We're going down. Can't stop it. Currency strength meter still right now even applies to what happened. Because look, the Japanese yen was too strong all day. So we're going down. So let's look at the 15-minute time frame. Okay, so this is 5:30, 5:15. So at 5:15, we have a 2-2 confirm. It's not the easiest to spot. Okay, so we know it's going to pull up to here, but we have a 2-2 break of structure. Being 4-hour time frame that we are going down. We are. You can't stop that. This is the 4-hour candle coming back down here. Whatever, we're coming up. Got the little wick to go fill in between zones. So what we know is on those pullbacks, this whole area, based off of where price broke the structure, that's where price wants to come back. We broke the structure, so these are the points that price wants to come back. Look, even here, we broke the structure. We retested the structure. We retested the structure. We broke here. We retested here. We broke here. We're going to retest here. Minor supply and demand zones. Boom. Our zone, our sell zone, this is your sell zone. Your sell zone, so where's your stop loss? Where's your stop loss? I'm going to give you a second to think about it, and now I'm going to make it. Stop loss can be anywhere in this area. Sure, you say it's 11 pips. Okay. So you say it's 11 pips, and it's 33 to our next zone. But even at this point, it's already at 22. Your profit should already be taken for most of your entries. Your stop loss ends up becoming 0. Your stop loss is 0. Riskier, you're trading around news. But if you're following that 4-hour time frame and trusting the analysis and trusting the trend, we came up and retested zone. That's a 0 to 22 ratio on whatever you have, just following momentum. This is potential. Even if you come up with maybe a wick, that's just your potential range. But being that higher time frame, confirm. 2-2, boom, boom. Change of trend, we're going down. 15-minute time frame. You're already done, though, in the first 15 minutes on both of those pairs. You're done. You're already done. So we tapped the zone multiple times. And what did we create? Just by 6:30, 7 a.m., 1 hour. There's your stop loss in profit. This was that next zone going down. That's 45 pips in 1 hour. Making more lower highs just by being confirmed for the higher time frame around a high volatile time. High volatile not really meaning by news, but there's always 5:30 news. So that morning is important. There's usually right at 5:30 that pre-push. So there's like a pre-push, boom, right there at 5:30. Even here, boom, there's pre-push. The catalyst just made another lower high right for 6 a.m. and just tanked. Just boom, 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 we're done. But you're already done. Stop loss and profit, whatever. Whatever you want. Actually, it needs to be more like this. So you have there's your 13 pip stop loss. But you're done on both of them. You're done. In 1 hour, you're done. You should already be done after 10. You just get in and out with all the percentage you want on a few entries, and the rest is your scalp to swing. Scalp to swing. This is even trading around an NFP time. The higher time frames don't lie. I'm just gonna go like this. Go like this. And we're gonna go back to that daily just so that we can look at it again. We close below the structure, right on the structure. Here's your destination. Just based off wicks. And the way that this price broke, this is your clearest next zone that price is going to. Same thing. 2-1. Boom. We didn't even make a pullback. Done. Now just writing the 14E mate. Done. But you're done. Zero drawdown. That was just by following momentum. And this happens on all kinds of pairs. Watch. I'll go hunt one with you right now. CHF. You know what? Let's look at the currency meter. And let's just based off currency meter right now, we can go over and say, well, NOK Jappy probably went down. CAD Jappy, I don't know. But just based off of this, like let's just type in NOK Jappy. I'm never going to look at NOK Jappy. Probably never looked at NOK Jappy. Look, they don't even have a wand though. Like, what am I looking at? I don't even want to look at this. But the higher time frames don't lie. So look at this daily. Look how the daily closed. Forget the nasty liquidity wick. Like, that's a big liquidity wick. That's like GJ. Huge. Like GJ, you need like a 70 pip stop loss for a scalp. Right? Like, close right here. Like, where are we going? Well, just look left. It's a realistic destination. Where did she touch? Right to the top of this. Just in that whole area. Whatever. 83. Just based off that daily. And the 4 hour is not going to lie to you. 5, like, oh, this is like a different time zone. This is the 4 hour, but mine should not say 5. See, I don't even know the fundamentals or anything of NOK Jappy. I never trade NOK Jappy. Nasty pair. But higher time frames don't lie. Boom, boom. Higher time frames don't lie. So you can trade on any pair. Let's look for some more. Just based off that daily, we are going down. Like, nothing's going to stop it. Let's look at CAD Jappy. So we are making lower lows and lower highs, but this for me is not what I'm looking for. This is not as textbook that I want to look for. Because you're either making higher lows to go up, rejecting, or still lower lows and lower highs to go down. I don't like this very much. The 15-minute, sure, it could have looked beautiful, but I still don't like it as much. Even though it came here, it still made the structure, but just based off that 4 hour, I wouldn't have liked it as much as just seeing USD jabbing and saying, okay, we're going down. So daily, of course, wick to fill, but look how big this liquidity was. News really affected cat jabby. But structure was still there. Another 2-1, boom. It was nastier, more consolidation, more confusion in that early morning. But then eventually, like price closing right here, was your entry at that time. At least by 6:30, there's already your entry, and the 5-minute would have made a pullback. Oh yeah, and look what the 5-minute ended up doing. This was not so long though. Still 11. Unless you sold off that exactly. And just in this whole range. But more retested, broke structure, retested. Not as nice. Not as nice, but USD Jappy was holding it down. Euro Jappy was. So, Euro USD, not the best. No real clear sense of direction. Price making lower lows and lower highs. Boom, boom. We broke this whole structure. Maybe it's just retesting. This is the structure. It's retesting the areas that price had broke. Maybe. I don't really like it. One thing to do though is still understanding those lower time frames. If you guys have seen the video that I posted earlier, seeing where you can place pending orders for like sell limits. But even a common hedge. Just, well, you know what? Maybe we do go down. So if we are going down and we're coming back, we're probably going in this wick range. It's just going to tank and then freeze. There it is. So, even in this whole wick range, hedging against yourself, your TP is already done. We talked about it. Now it pulled up for the next, now it's 6 a.m. So now 6 a.m. doesn't have necessarily the nicest wick to fill, but these types of candles, these like dojis on the higher time frame, are usually signs of rejections here, going any more bullish. So it just came down, huge retest because of news, which we can go look at it. But then what does it do for 10 a.m.? The new candle opening up, and we'll go look on the lower time frame to see what that looks like. That's even just waiting until 10 o'clock. So just by waiting till 10 o'clock, did nothing during the 6. Unless maybe you hedged against yourself. Put a 5-pip stop loss. Whatever, 15-pip take profit. So you're losing this to make that. And Euro USD. The pending orders were a success, just hitting and dropping. But very, very, very choppy. The point that Euro USD would have been an easier sell entry for you was looking here. being in between those zones, closing below structure, we do want to go down. I know a lot of traders, this is their textbook setup, just like a rejection close below. That's their hyper scalp. Oops. This is like one of my ideal setups on a lower time frame. But Euro USD wasn't as nice. We know that. We know that it wasn't as nice. Unless you're just a master at scalping, no matter what. It just, the clear direction was not there. But this hyper scalp setup was still there. Closing below in between. There's your money and you're already done. Stop loss and profit. Whatever, maybe you got 6 pips or maybe you go to 10 pips. There's your stop loss. Your TP's already done. Now your stop loss. Okay, now you're out. Well, you just traded it. You just successfully scalped your USD. Maybe have one with an actual stop loss. With a bigger TP. I don't know. Whatever you want. Wasn't as nice, but they were still set up. USD Jappy was the winners. Euro USD. Let's look at some more. I just want to see. Okay, perfect. Jeez. Oops, I need to go back too. Textbook. Super textbook. Typical 4-hour push. Here you go. You're kind of right on that zone, but you got a wick to fill. Super engulfing. We want to go down. It's just textbook. We're sitting right on the zone. We want to go into that wick range. We want to go into this wick range. It's too strong. Way too strong. There it was. Now we have a wick to fill. Closing below structure. Boom. For the 10 o'clock. Even just waiting for 10 o'clock. Okay. Maybe you're like, you know, I'm uncomfortable. I don't want to do it. Even just by waiting until 10. There it was. Let's look at the 15-minute setup. Simple. Same deal. 2-1. 4-hour time frame bias bear. Higher high, lower low, lower high. We just broke this structure. There's your lower high. We just retested this structure. High high, lower low, broke, retested. We broke, so we retested. There's your lower high. We're going down. 2-1 confirm. CHF Jappy. Same thing. Stop loss is here. Stop loss is here. These wick ranges. You should already be pretty much done for the morning. Now you're done on this. 24 pips already. By the time 15 minutes is in, you're already at 32. I'm done. I'm way done. Way done after 10. The rest is scalp the swing, like another lower high. Just based off that 4-hour time frame. 2-1, boom, we're going down. Changing the structure, boom. This is 2-2, boom. That's a pretty nice sell confirm here. Some more liquidity off that 14 EM8. Wild pair. Look at how wild the pair is. The structure broke. Came back to retest the structure. You're done after this push. You're already done. No more trading for you. Next. But the rules still apply. The same structure applies. So that's what I got for you today, guys. You guys saw a little more bits and pieces of my, like the PDF, the plan. So harvest it, absorb what you can. Let me know if you have some feedback. Love to hear back from you on how it's helping. I get tons of it every week. So I'll talk to you guys soon. You guys know how to reach me. If you don't already, my Facebook, which is just my name, my email, and my Instagram. You guys know how to get a hold of me. I'll see you on the next one.